Okay, welcome back everyone. I have been out on vacation for the last couple days. Just got back last night, pretty late, so I'm a little tired. I'm not going to go through a ton of charts, but I do want to give just an update video on kind of the general market and what we saw really happen in the Friday and Monday. So starting off here, I mean, Q's is, they're trying to rally Q's. To me, it doesn't look that strong. Yesterday, obviously, they popped it yesterday. Today, we haven't made a new high. So you can see here, this is your downtrend right there on the daily. We kind of started to break higher. Right now, it looks like we keep getting rejected at this 324.50 area. You can see here that this was really this is where it kind of held as resistance, and then it fell, popped back up, hit it again, and we're just kind of struggling between that range right there at 324.50. And on the lower end, if you go down to the hourly, you'll see right down there at about 311. All right. So on the hourly, you can see that this is the range we've been in. When we dip below it back here, this was your initial tag of that 297 major support. That was a more major support level that I kept pointing out. That's why I was really focused on it hitting that level. And all through here, this chop zone, I continue to say I thought it was going down to 297 area. Even, it gets down and it rallies and everybody feels like, nope, that's the end of the rally. No, it's not. But then it rallies again, so it kind of chops you out. And then a lot of people kind of get chopped out of the trade before they're able to hit it. So again, it's all about focusing on those key levels and just reading the charts. So again, we're in the same range again. This is where we were struggling back before. We've recovered that and we're just chopping around that range. So until I see a break above that 324.50, a definitive break to the upside, then I suspect we're going lower, and we're just kind of in a sideways chop range right now. If we break to the downside of 311, start to break down, then I think we're heading right down to that 297, but we've already been down there and we tagged that major support already. So if we get it, we'll probably get a bounce there, but I don't expect the bounce to be as definitive as this last bounce right here. I think we're going to get just a slight muted bounce, maybe a day or two, and then break down and head straight down to this. Right now, the level that we'll probably get down to is about 285.50, somewhere right in there. I've got it kind of circled, but it's basically this trend line that's marked out here. And if you go to the weekly, that trend line is your bull market since the 2009 lows. So here's your nice price channel right there in triple Qs. And, you can see that the top of that trend comes in right there. So I'm looking for a tag of that top of that trend. I think that's probable at this point. Okay, so those are the ranges to watch there on Qs. One thing that tells me I think we're going lower is I haven't seen any reversal signals. I haven't seen bullish divergence. No reversal candlesticks telling me that this downtrend that started right here has reversed and changed. I don't see anything there. And then I also don't see any bullish divergence. If you look here, there's nothing that makes bullish divergence, making a new low and a higher low on the momentum. So in general, I still see a downtrend with no change. And downtrends don't just go straight down. There's bounces along the way, and that's what it looks like we're in right now. Again, the levels to watch, I pointed out a break up above that is, pretty bullish, and a breakdown would be just a continuation of this trend. Another thing to look at, which also kind of makes me want to lean towards more downside, you look at something like IWM, and that's starting to break down. So there's this game of whack-a-mole that the market has been playing recently, where basically when tech sells off, the other sectors don't sell off, and then the other sectors sell off, and everybody runs over to tech. So, there's not a broad-based sell-off. That's another reason why I think it's likely the market's going to continue lower, because we're not seeing that broad-based sell-off. We're seeing kind of duck and cover action. And I think until you see a broad-based sell-off where just everything is selling off and there's kind of panic selling, you're usually not finished with the correction or a downtrend. And so that's why I'm expecting more downside. IWM, you can see here, I pointed this trend out, for quite a while, but you have here on the daily this trend line. See how we have a support here, held support here, held support all through here, broke, but they recovered it real quick. Look at the recovery too. It's just this like gap up, just these gap ups, overnight recovery, pretty thinly traded. They recovered it, so that was a bear trap for the short term. But what it did up in here when it recovered is it did two things basically. One is on this recovery, it made a slightly new high. Right here, it was just a slightly higher high, so I circled that. And that higher high was on less momentum, so that was negative divergence right there. And it also ran into this purple line right here, which is major resistance. And if I go back on like the weekly chart, that's a trend line coming off your 2009 lows, and you can see all these weeks held support all through here, held support, held support. I kind of X that one out and just throw that out of the trend because there was no trend established before then, so it just was an undercut. But once it recovered that, for years it held that trend, and it really established as a trend. We broke trend in 2018, and you can see here this big rally up is just a back test right into that resistance. So, run up into major resistance with a negative divergence on the daily chart. You look for a break of the trend line right there. We've broken now. I think this one's the real deal. I don't believe this will be a bear trap. And I'm looking for this to head down to the lower trend line down here. This comes up here off your March 2020 lows. You have a reaction low, reaction there, reaction there. So you got 3 reactions. That's pretty good. And it looks like we're heading down to that trend line. So I don't know when we'll actually get down there and hit it. But to me, it looks like there's more selling, down again today. And I think we're heading straight down there. So whether this selling, whether we start to see the selling in the Qs start to pick up along with the rest of the sectors and like small caps, I'm not sure. Maybe the small caps will sell off and the Qs will kind of hold up. But ultimately, I think at some point, I just don't see this downtrend that we've been in for a little while being over until we start to see broad-based selling. All right. When we start to see broad-based selling and just everything is selling and everybody's just selling everything, maybe some panic selling, we'll start to, though more than likely we'll start to see signs of the end of the downtrend. But as of right now, I don't see it. So I see more downside until I see a change in character. So, watch the SPY because there's no real selling in the SPY. I mean, the SPY's just right off the all-time highs. And, we haven't started to see selling. We held support right here at 387.50. I'd watch for a breakdown of that. Ultimately, I think the SPY has a ways to fall if or when that broad-based selling comes. And so I'm just kind of watching that. I'm not really trading the SPY, but I'm definitely watching that for more broad-based selling. Another thing to watch, obviously, is the financials. This is the trend line I had marked out. It broke on Friday, so I wasn't able to take advantage of it. I was out and away from my trading platform, but it broke on Friday, and it's just been selling ever since. You can see just down days. We haven't seen that impulsive selling yet. I think there's more downside. XLF to me looks like it's heading down to this $30 area, and that is going to be still a drop of another 10% or so. So again, I'm seeing selling in the financials, the small caps, the tech is kind of flat. It was up yesterday. They're kind of, hiding out. There's just this, sell off in some sectors and then everybody rushes over to the other, and there's a lot of rotation going on. So you have to kind of keep an eye on that. But I still think until we see broad-based selling, I just think there's going to be more selling across the board until we start to see, the SPY starting to sell down. Okay, the bond market TLT. So we do have pretty clear bullish divergence now in the long bond. So that is starting to show signs that there's going to be a reversal in potential downtrend. Doesn't mean we've reversed yet, but we're seeing signs that there is a reversal. So you can see right here, this was a divergent low right in here. See how we made higher momentum on the RSI while a lower price in TLT. So that's a sign that we're likely going to reverse soon or should reverse. Why would the bonds reverse? Well, likely the bonds are going to reverse because there's a safety trade going on. So I think there'll be a bid in bonds if you start to see that broad-based selling. Typically, bonds move up when stocks move down and vice versa. people use bonds for a safe haven play. So if people are going to come in and buy bonds, they're likely going to do it because they're seeking safety from the market and a broad-based sell-off. And maybe that's what this is showing us is, just continued, the potential for more selling. Now, this doesn't necessarily hurt tech, and I think that's why tech is kind of rallying a little bit, is because the bonds are moving up. But ultimately, I just don't see tech holding up and the rest of the market selling off and tech holding up and being strong. It's that would be pretty rare. So until we see that kind of capitulation of selling, then I still think many of these sectors are going lower, but people might rush into bonds. This is something that's interesting. The DXY is breaking above 92 today again. It's kind of been battling with this 92 level. We broke above it once, but it was instantly rejected. You can see we're starting to break above it again. So a close above 92, there might be a flight to safety going on where people are rushing to the dollar. Potentially negative for gold, so we'll definitely need to watch that. But also negative for the market. A rising dollar should be pretty bearish and negative for the market in general. And so we're going to need to watch to see what happens here. If the DXY can break higher and start to hold, I think it has the potential to run all the way up to this 96, 97 area. So really what I'll be watching for is how gold reacts if that happens. Potentially could be negative for gold. It doesn't have to be. I've seen the dollar and gold rise at the same time, but we'll want to watch that. And the dollar, obviously, this was your bullish divergence right here in the dollar, and see how I have it marked out. I talked about that, and we've really been trending upward ever since. We kind of moved up, consolidated, moved up, consolidated, and potentially we're going to continue that uptrend. I don't see any change in character that the dollar has finished moving higher, so I'll keep an eye out for that and how that affects the market. Update on TAN, if anyone's short on this one with me, I'm short on this. So TAN, clean up trend line right there. At the top of that trend, we made a bearish rising wedge, and we also put in negative divergence. See how we just started dropping off on the momentum? That signaled the trend reversal was likely. We got a break of the trend line right here, and we've been downtrending ever since. All right, just making a series of lower highs and lower lows, and I don't see any change of character there that's going to change. So ultimately, I think TAN's at least going to hit this 200-day moving average. It's about 74 right now. I think that's very likely. We'll probably undercut it and maybe we'll hold. If we break below that, then I'm looking down the next level of support down here at 58. And that's my only target that I have left on this one, so I'll kind of keep an eye on that. Snap here. I don't have a position in this one, but basically we have, this top of the trend line. We could just get rid of that. But the point is, this is a pretty clean trend right here. You've got reaction. You got a gap up to there. You've got two reactions there, another one there. Here we broke, and it looked all good, but then they recovered it, making it a bear trap. Recovered it, but now we're back below it again. We've broken back down. So to me, this looks like the real deal. And I think we're likely heading down to gap fill. I don't know if we'll actually gap fill, but it's probable. The 200 days down here, so we'll probably run down to the 200-day bounce and then consolidate for a while before making our way down to gap fill. Gap fill for me would probably be the final target on this one, and that would be a drop from where we're at of about 48% or so. Yep, that's what I think. That's what this one looks like it's going. You can see big negative divergence right there. See how it's just been, the momentum's been diverging lower while price has been going higher. So it's signaling that a trend reversal is likely. I think we're starting to see those beginning signs of it. AMD here. Again, this one has been in an uptrend since 2016. And you can see just nice clean uptrend there. It's really just been walking up the 200-day moving average. And then recently we put in negative divergence right up here. See how the momentum right there has just been dropping off, making lower highs and lower lows. So there's your bearish divergence. You look for a break of trend. We got the break of trend right here. We did a back test, and now we're back below trend. And to me, it looks like we're trending down. All right, you can see how we sell off, kind of pop it a little, sell off. So again, to me, this looks like we're breaking trend and we're heading lower. I think this one is likely to hit $59 before it gets. That's some good support right there, $59. So I think we're likely going to fall straight down to that $59 area, and then we'll get a bounce in that area. A substantial bounce, because that's some pretty good support. All right, if we don't bounce, we just cut right through it. Well, then there's something else going on, and this is potentially going to go a lot lower. But for now, I like this one, and that will be a drop of, for where we're at, that's a drop of about 25%, and I like that. Still looks good. So they're hitting gold miners a little bit today, but I don't see any technical change in a lot of these miners. They still look good to the upside. I mean, obviously today they're selling it down. They could even, they could come back down and undercut, like on GDX here, they could undercut this 31.35, make a new slightly lower low, and still keep bullish divergence. So again, it's going to take time. If you're going to build a bottom, it's not going to, usually it doesn't just bounce right off. You kind of have to kind of bang out a bottom a little bit, and I think that's what this is doing. If I kind of scroll through some of these other miners, I mean, you'll see like Franco-Nevada, still above its trend. It's really not changed. It's basically flat today. Agnico Eagle, still trending up. A little pullback day, and you're going to have those. But to me, still looks like it's, looks like it bottomed right in here. And, but again, this one could sell off, and we could come down and hit this 51.50 and still have bullish divergence. So there's always potential. When you have bullish divergence, there's always potential to can extend that. Divergences can extend, and they can extend for a while they build. So just keep an eye on that, and typically if you want to be conservative, you obviously want to wait for a break of the resistance line. On this one, this is your resistance right here, so you'd want to wait for a break of that for more upside. But again, I don't see any signals that tell me that it's not really just kind of making a bottom. HMY, well, this one's, continuing to get rejected at this downtrend line, which is expected, we need to break trend in order to see, a move, a complete change in trend. All right. But we have bullish divergence, and it's signaling we're going to get that breakout. We just don't see it yet. Something like sand, you've got a downtrend right here. We broke to the upside. We're coming back in for a back test. So technically there's nothing changed. Even though you're selling off and back testing, that back test is, that's support. So you look to go long at support. Obviously we go short at resistance. And that's what I see in the miners as of today. Here's Barrick Gold, I believe. You can see we have this bullish falling wedge. Broke out. We're coming in for a back test, still holding above that. We haven't broken that technical structure. So doesn't mean it can't break. Obviously we can break down and then things will change. But as of right now, it still looks good. Okay, guys, that's all I got for today. Leave me a thumbs up if you guys find value, and I will catch you guys on the next video.